First quarter earnings are starting to come in from Wall Street banks and brokerage firms, and one of the components in the earnings, of course, is volume, trading volume, what's going on there. We're going to dig a little bit into those numbers today, and I'm joined to do that today. I'm joined by Matt Simon, a senior analyst at TABB Group. Matt, thanks for joining us.
Thanks, Greg, for having me on.
So everybody sort of knows that volumes, equity volumes have been kind of on the sluggish side, but I wondered if you could tell us a little bit about, from what your work you've done, what you see in there in those numbers.
It's a really interesting environment we're in here, Greg. The S&P 500 was up 5.6% in the first quarter of 2011. That's the largest quarterly gain we've seen since 1998. Meanwhile, volumes have been a bit sluggish.
Yeah.
And that's meaningful for our brokerage clients, and it's meaningful for a good portion of the sell side, because when volumes are low, then that means that they're not making as much in their equity trading revenues. And what we wanted to do is we wanted to show some of our fellow clients and some of our fellow people in the audience that, just what this means and how the environment has changed over the last couple of years.
Right.
And we see here in this first chart in terms of volumes that in the first quarter we were just under about 8 billion shares per day. Now, in post-credit crisis in 2008, 2009, we totally skyrocketed. That number just went so far up, it was unbelievable in terms of how electronic trading has progressed. Now, more recently, those numbers have come back down, and we're starting to look a lot more like 2007 and 2008. And we're not sure when this environment's going to turn around, and I think a lot of that has to do with the lower VIX.
Okay, yeah, and that's a good point that you bring up. So that is one of the main components that has to do with volumes and whether people are going to trade and whether they feel comfortable and
Right.
certain uncertainty and that sort of thing. So what have you found in that area of volatility and the VIX and what's going on there?
The VIX index is really highly correlated to where volumes are, and what we've seen is that events like the Japan tsunami and the earthquake that went on,
Right.
and days when the market was a bit jittery with the Eurozone activity, the VIX spiked up. But as a whole, when you look at the quarterly data, the VIX is right around 17 at the end of March 31st,
Yeah.
and it's down well below its 5-year average. And so what's happening here is that the long-term investors seem to be sitting on the sidelines. And even though we've seen some money flows out of sovereign and money debt and corporates moving back into U.S. equities, it doesn't seem to be translating into the higher U.S. equity volumes that we were seeing maybe 2-3 years ago.
Okay, so in the equation, we've got sort of lowish volumes, if you will. Volatility has been under wraps as well, and except for a spike here and there. And in terms of fund flows, is it the same sort of setup where you're getting, we've had a couple of months, I think, in the first quarter where as you mentioned, equity fund flows were positive, but it wasn't really a long-term trend. I mean, that sort of turned around in March. Is that right?
Yeah, I mean, what we saw was that in January and February, we actually had this huge reversal. For the first time in a couple of years, actually, the flows were really up. I mean, and we saw this coming from what was a catastrophic May and June after the flash crash last year. And now, in the first quarter, it seemed like, according to the ICI numbers and what we've been following, that we were up about 20 billion in January and February. However, we went back the other way in March, where we went back to bleeding assets from U.S. equity mutual funds, losing about $8.5 billion from the major funds. So even though it's not as big of a decline as what we saw after the flash crash or post-Lehman, which we lost $47 billion, it's still a lot of money, and that kind of leaves us with where are we, and what's this market going to look like over the next couple months?
Okay. Well, thanks for taking some time and explaining that out for us. Again, so we've got those three components: volume, volatility, fund flows. They're all sort of tied, and how the interaction works and whether we're establishing any kind of trends or not. It seems more like a one-off, certainly on the volatility and on the fund flow side. Halfway through the month of April, a couple more weeks, we'll get some more numbers and see what they look like. So, and also, I guess, with the earnings as they're coming out, take a look and see what the actual brokerage firms and banks are saying about what they're seeing on the inside.
Yeah, and this week we've already seen a couple banks report, and their earnings in their equity trading divisions is definitely down.
Right.
It's going to continue to be reported that way until this rebound occurs. The question is, when is that rebound going to occur? And we'll be updating this data over the next couple of months, and we're going to be doing this on a quarterly basis. So we'll keep track of it and keep people posted.
Great, excellent, thank you. So again, my name is Greg Crawford. I'm the editor of TABB Forum, joined today by Matt Simon, a senior analyst at TABB Group. Thanks for joining us.